So if you want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. And basically, how did I make $340 trading Meta call options? So at 10:01, I bought 4 Meta call options. And let's see, 5, 14. So at 10:01, which is this candle right here. So basically on the 14th at 10:01, I got into Meta call options as soon as it landed on the 50-day moving average. Once I saw that opportunity happen, once Meta landed on the 50-day moving average on May 14th, I bought call options on Meta and just waited for a slight bounce to see if Meta could use that 50-day moving average as support. It did. So at 12:32, I sold out the position, and that's how basically I made $340 trading Meta call options. So it's just like I've said, try to use the moving averages as support or resistance. Enter, whether you're playing calls or puts, using the moving averages as support or resistance levels. And once you're in the position, pay attention to your percentage goal, whatever it is, and then try to sell out for a gain, and try to repeat that cycle over and over again. For me personally, I try to sell out the position once I see that it's up more than 5 or 10%, or exactly once it's up 5 or 10%. I typically try to stay safe and try to stick to those within those percentage targets. The reason I stick to those percentage targets is because I personally feel comfortable selling out at those percentage targets. I try to typically aim for reasonable targets, not unrealistic targets if I'm day trading. A lot of traders, I guess you could say like new traders, make the mistake of trying to aim for a 50 or 100% percentage target gain, and then all of a sudden that's not even possible, because most of the time these stocks aren't that as volatile as one would think. It's not like it can happen. It can happen. You can make 100% gainer or a 50% gainer, but is that going to happen every single day? Not really. And so most of the times, you will take losses as well. I'm not perfect by any means. I do take losses personally, and basically the way I go around by taking losses is when once I see the position is down 10%, and I'm feeling, if I'm not feeling comfortable in the trade, take the 10% loss, move on to the next trade, double the next position's percentage target by 20% instead of the 10% target. That way I can recoup that loss that I took previously, and and basically once let's say I'm feeling like, I guess you could say, confident in the trade, and I'm down 10% already, basically what I'll do is I'll basically try to look. So let's say I got in, let's say I got into today's chart, right? Let's say I got into Meta put options as soon as it approached the 20-day moving average on the 15 candle, right? Okay, it's starting to go up even more. It broke over the 20-day moving average. My next support, or my next entry point, would be the 50-day moving average. That would be my next opportunity to buy more Meta put options. And then let's say it just decides to go even further, right? Well, I'm just gonna wait patiently for Monday to approach, see if Meta can approach the 180 or 200-day moving average. If it does, and then if I see that Meta is starting to go down, I'll basically just patiently wait for to see if Meta can see that continuation towards the downtrend. But I'll try to also use the 4-hour time chart. So what I'll do is like, okay, just like I explained to you guys, I got into put options here on the 15 candle. I got into put options here on the 50 day moving average. And then let's say, I don't know, Meta decides to approach the 200 day moving average, right? I'll buy options there once it approaches the 200 day moving average. But after doing that, I'll switch to the 4-hour time chart, try to see what the trend is currently. Currently, the trend of Meta is basically, it's in a downtrend because of the 9-day moving average crossing over the 20-day moving average. So typically what that means is that it's a bearish indicator. So whenever the 9-day moving average crosses over the below the 20-day moving average, it's an automatic bearish indicator for the short term. Now it looks like Meta on the 4-hour time chart tried using the 50-day moving average as support. It used it here. It looks like maybe that could be the case for Monday, but currently it is below the 50-day moving average. After hours, they're at 628. So this could be a sign that Meta could enter into a downtrend on Monday or for this upcoming week, and we'll have to see what happens with the trend of Meta. Like I said, I try to use the 30-minute time chart. I try to use the moving averages. I try to distinguish the trend of that particular stock that I'm trading or swing trading using the 4-hour time chart. Typically what I'll do is like, okay, sometimes I'll try to let's see. So here's another way I'll go around it. So if I see that I got into one call option on the 15 candle as soon as it approached the 20-day moving average, what I'll do next, I'll be like, okay, it looks like it's approaching the 50-day moving average, but I don't feel comfortable buying there yet more put options because I don't want to waste my money. What I'll do is I'll look at the 4-hour time chart, try to see the trend, and if I see that the trend is bearish, I'll basically wait and see if can Meta or that particular stock continue that bearish trend. And if it does, I won't buy any more options because I don't want to blow more I rather just let that particular play that I did once one time ride the trend. And once I see that it rides the trend, I'll sell out the position for either the same percentage targets, 5 or 10%. So basically I'll try to use the 4-hour time chart to use to distinguish the trend of that particular stock. And basically I'll use the 30-minute time chart to get into positions whether I'm playing calls or puts. So that's pretty much it. This is not financial advice. As always, take care and bye.